Welcome to Section 3 of the ASC 710 training series. This section explains how to measure the compensated absence liability once accrual is required, covering what costs to include, how to handle expected pay increases and forfeitures, and walking through worked examples step by step. By the end of this section, you will be able to determine the correct pay rate to use when measuring the vacation liability. Identify all cost elements that must be included. Apply the basic accrual calculation using employee balances and rates. Adjust the liability for expected forfeitures and anticipated pay rate changes. And walk through a complete worked example from beginning to end. The compensated absence liability is measured at the amount the entity expects to pay when the employee uses the time off, or when the balance is paid out on termination. This is not necessarily the employee's current pay rate. If a significant pay increase is expected before the vacation time will be taken, the measurement should reflect that expected future rate. The liability is measured on an undiscounted basis, meaning no present value adjustment is required for the time value of money, which simplifies the calculation considerably. The measurement of the compensated absence liability must include several cost elements beyond just the employee's base wages. Employer payroll taxes, including the employer's share of FICA, FUTA, and SUTA, must be included because they represent a real cost the employer will incur when the compensation is paid. If employee benefits such as health insurance continue during the absence period, those costs are also included. The gross liability is then reduced by expected forfeitures, which is the portion of accrued balances that historical experience suggests employees will not take or receive as a payout. The decision on whether to adjust for expected future pay increases requires professional judgment. If no significant pay increases are expected before the vacation time will be used or paid out, the current pay rate is appropriate. However, if the company has a known merit cycle or a scheduled salary increase that is expected to occur before the leave is settled, the liability should reflect the higher expected rate. This judgment must be documented, and the rate assumption used should be reviewed and updated at each period end as new information becomes available. In practice, not all accrued vacation balances are actually used or paid out. Some employees resign without taking all their leave. Some forfeit balances under use it or lose it caps. For policies that include forfeiture provisions, the gross vacation liability should be reduced by an estimated forfeiture rate. This estimate must be grounded in historical experience. For example, the percentage of accrued balances that have not been used or paid over recent periods. The forfeiture estimate should be updated at each balance sheet date as new information becomes available. The basic vacation liability calculation follows 4 steps. First, identify the number of vacation hours or days accrued by each employee as at the balance sheet date. Second, multiply the accrued balance by the expected pay rate at which those balances will be settled. Third, add the employer's share of payroll taxes on that amount. Fourth, reduce the result by estimated forfeitures based on historical experience. The result is the total accrued vacation liability to be recognized on the balance sheet. Let us walk through a complete worked example. A company has 20 employees, each earning an average salary of $60,000 per year. The vacation policy grants 15 days per year. At December 31, every employee has 5 unused vacation days remaining. Employer payroll taxes are estimated at 8% of wages. There are no expected forfeitures in this simplified example, and no material pay increases are anticipated before the vacation will be taken. We now apply the 4-step calculation. Applying the calculation, the daily pay rate is $60,000 divided by 260 working days, giving $230.77 per employee per day. With 5 unused days per employee, the liability per employee is $1,153.85. For 20 employees, the gross vacation liability before payroll taxes is $23,077. Adding employer payroll taxes at 8% adds $1,846. The total vacation liability to recognize on the balance sheet is $24,923. Now let us apply the 4 criteria test to the same company's sick leave policy. The policy provides 10 sick days per year, but unused days are forfeited at year-end, and there is no payout on termination. Criterion 1 is satisfied because sick leave is earned by service, but Criterion 2 fails because the days are forfeited on termination and do not accumulate. The failure of Criterion 2 alone is sufficient to conclude that no accrual is required. If the policy were to change so that unused sick days carry forward or are paid out, all 4 criteria would be met and accrual would become mandatory. At each period end, the vacation liability must be updated to reflect current employee balances and rates. If the liability has increased since the prior period, the entry is a debit to vacation expense and a credit to accrued vacation liability. If the liability has decreased, for example because employees used more time than accrued or forfeitures were higher than expected, the entry reverses. Debit the accrued liability and credit vacation expense to reduce it. When employees are terminated during the period, their vacation balances must be addressed immediately, either by recording a payout or zeroing their balance in the system. Let us review the key takeaways from this section. The vacation liability is measured at the expected future pay rate at which the time will be taken or paid out, not necessarily the current rate. The liability must include employer payroll taxes and any benefits that continue during the absence. The gross liability is reduced by estimated forfeitures based on historical experience. The balance must be updated at every period end as employee balances and pay rates change. And the 4 criteria test must be applied separately to each absence type in the company's policy. Thank you for completing Section 3 on measuring the vacation liability.